Hello, hello, hello. Millen livis is here, your holistic financial independence mentor. Great to be with you today, and I want to welcome you to the part 2 of the Save on Taxes, Protect Your Wealth mini training. Today, I will share with you another power strategy, really power strategy that most successful investors and super rich folks use to grow their wealth and protect it from paying a lot of taxes.
Grow your wealth, live on your terms.
Last week, in part 1 of the Save on Taxes, Protect Your Wealth mini training, I shared with you pros and cons of using individual retirement accounts, often referred as IRAs. When I was working on Wall Street and I was changing companies, going from Bankers Trust to American Express to Dean Witter to Deutsche Bank to Morgan Stanley, etc., I was suggested that I open a traditional IRA account, and every time when I transfer the company, I will transfer funds or convert funds from my employer account called 401k, where the only options I had were investing in mutual funds, or company stock, by the way. So not a lot of options. So I was suggested that I convert this my funds from employers' accounts, 401ks, to this account called traditional IRA. And over time, I accumulated a significant amount that I had full control over. I could invest in stocks, I could invest in ETFs, exchange-traded funds, in bonds and mutual funds. I had more choices. Okay, so the story here is the government's intention behind this, creating this IRA type of accounts, retirement accounts, was to give Americans a place to save extra money outside of employers' provided pensions or 401ks. Because, like I said, those accounts are great if employer matches these accounts. However, the options of the investment vehicles that they offer you as an option to invest in are very, very limited. And that's why definitely if any of you still has company provided account and you left the company, definitely use this opportunity to convert these funds into IRA account. Traditional, they also called rollover account. In other words, this opportunity that was offered to Americans in order to contribute their pre-tax money to these accounts, right? And invest in things like stocks, ETFs, mutual funds, and only owe taxes on the proceeds when they start making the withdrawals at the age of 59 and a half. Okay, so again, on these accounts, traditional IRA accounts, you can invest in any stock market vehicles like stocks, ETFs, bonds, etc., which you cannot on any employer provided accounts. Now, note that money taken out before the milestone that I mentioned, 59 and a half years old, would be taxed at both regular income tax as well as 10% early withdrawal penalty. I just want to make sure that you remember that, because if you have this opportunity to keep these funds until you're 59 and a half, it would be a much better option for you. And so, because less you give to Uncle Sam, the better you are off. So when people leave the company and they transfer assets from their old employers' 401k plans, like I did, into their IRA accounts, because the IRA provides better control and better investment options, these accounts called traditional IRA, or most often they called a rollover IRA, because you're rolling over from your 401k or other maybe pension plan accounts, employer provided accounts, into your own IRA. You're rolling over. So it's rollover IRA. In 1997, a senator by the name from Delaware, by the way, a senator from Delaware by the name of William Roth suggested a new type of IRA, one that people could fund by after-tax money, money that they already paid tax on. In exchange for paying taxes upfront, investors were promised to never, ever have to pay taxes on their accounts again, which makes sense, right? And they promised this no matter how big the profits from the investments may go. So, sounds great, right? The only caveat here is that there are income restrictions for directly investing in Roth IRA accounts. Like people who, I believe, I don't exactly remember the numbers, you can Google them, but I believe if you are single and you are making over 125K, you cannot directly invest in a Roth IRA. If you want to review all the pros and cons of traditional IRAs and Roth IRAs, please watch my part 1 video in this mini training where I covered this topic in detail, okay? By the way, in part 1, I also talked about the popular backdoor strategy that many people use, including myself, to fund a Roth IRA with as much money as you want, no matter how much you make, no matter how high your income might be. All right, so refer to part 1 of this mini training. And this option was available to people because lawmakers originally put in a provision that allowed people to convert their traditional IRA to Roth IRA without any restrictions, okay? Any income restrictions. So far, so good? Great. So many people take advantage of Roth IRAs. I have one, my family members have Roth IRA accounts, and most likely you use Roth IRA accounts as well, which is great. However, there is another aspect of 1997 revision that very few investors are aware of and use to their advantage. And by the way, right now we are reviewing IRA accounts. I wanted to change the banner. So the secret that has allowed successful rich people like Peter Thiel, the founder of PayPal, Warren Buffett, famous value investor, Bill Gates, and many others, this secret allowed them to amass huge fortunes in their Roth IRA. So let's talk about the secret type of IRA account that Wall Street doesn't want you to know about. Most Americans use traditional IRAs and Roth IRA accounts that are set up with traditional Wall Street brokerage. Would you agree? I know that that's the only thing that I knew when I started investing. That means that these people's investments are limited to investing in traditional Wall Street assets like stocks, mutual funds, ETFs, exchange traded funds, and mutual funds and money markets. Wall Street community loves this because it gets plenty of commissions and fees from IRA accounts for decades. Now we're going to talk about a different account that I want to introduce you today. And I'm super excited because it's so powerful. Many rich people use a different type of retirement account to invest in alternative assets. Alternative assets meaning other than what is available on traditional Wall Street accounts, brokerage accounts. They use a special version of the IRA, one that allows them to invest in the opportunities that offer returns, often referred to as asymmetric gains, meaning that you put in not that much and you get out a lot. That kind of gains referred to as asymmetric gains. And this type of account that I'm going to share with you today allows them to get these gains. And I see asymmetric gains that we, like common people, have seen in cryptos, maybe also in some private businesses, pre-initial public offering, pre-IPO businesses, or in real estate. And yet, these accounts are very powerful, and yet less than 1% of the investors in the US use this special type of retirement investment accounts. These accounts, commonly called as self-directed IRAs. Self-directed IRAs. You can have either a traditional self-directed IRA or Roth self-directed IRA. And all self-directed IRAs are required to have a third-party custodian under the Internal Revenue Code. Very similar to the brokerage IRAs that most people use. Like brokerage houses are third-party custodians for your traditional stock market assets. However, self-directed IRAs are not held at regular brokerage accounts, right? That's why they allow investing in alternative assets. They give you this self-directed IRA, this very special IRA accounts, give you the ability to go beyond Wall Street's traditional world of stocks, ETFs, bonds, and mutual funds. And that's the secret and the loophole that I want you to consider. Maybe it's not loophole, but it's a secret that many, many successful people use. So for example, let's just talk about specific example that will illustrate how much you can potentially save. So for example, shares of privately held and fast-growing companies are one of most popular options that people use, right? And it's an asset of choice of many successful investors like Peter Thiel and many others, because they invest in privately held companies and they hold the shares, these private shares, in self-directed IRA. And when company goes public, the shares go through the roof and they pay minimum or no tax. Please notice that self-directed IRAs give you access to a lot more than just private businesses, shares of private businesses, a lot more. But that's one of the most popular private shares of private businesses, one of the most popular assets that people use to hold in self-directed IRA. However, you can invest in just about anything else, from real estate to commodities to cryptocurrencies to precious metal bullion, not collectibles like gold coins, and many other assets. Now, I want to talk about the reasons why you have to consider a Roth self-directed IRA right now, because you can have a traditional self-directed and Roth self-directed IRA. So why now? It's a great time to consider. So self-directed IRAs have been around for years. Okay, it's not something that just happened last month or last year. However, there are several urgent reasons that exist in order for you to, and that's why I want you to consider opening the Roth self-directed IRA account as soon as possible. So there are several reasons. And the first and most obvious one is that your chances to avoid taxes on all the gains that you make in the future. It allows you, it gives you these chances to avoid this taxes on all the gains that you can get in the future. No matter what you invest in, the differences can be enormous, okay? No matter what asset you invest in. But it's especially pronounced when you're talking about something like Bitcoin, right? I hear a lot of predictions, especially from my investment teachers, my investment advisors, and coaches, that they predict that Bitcoin can hit 500,000 in the next few years. So let's say you decide to buy one Bitcoin. Let's just see how much you will save. So Bitcoin price can be volatile. We all know that. So let's keep it simple. Let's say that you buy it at 50,000 as a starting point, right? And right now Bitcoin is around 50,000, 48, 49,000. It went up, by the way. A couple of months ago, it was around 30. So if you buy Bitcoin, let's say at 50,000, and as many people believe it will go up to 500,000, it means that you're looking at the potential for 450,000 in profits, okay? Coming your way, maybe tax-free, if you buy it in Roth self-directed IRA. So how much of your investment that you keep will depend on where you hold your assets, where you will hold, in this case, your Bitcoin. Let's say you hold Bitcoin ETFs. By the way, now there are they created cryptocurrency ETFs. So there is a Bitcoin ETF, there is a Ethereum ETF. So let's say you hold Bitcoin ETF, exchange traded fund, in taxable brokerage account, okay? So every time you sell your Bitcoin ETF shares in a taxable account, there is a capital gain or loss associated with this transaction. If it's a gain, it would be, you will pay 20% capital gain plus 3.8 Medicare tax for the rich. Next, let's consider if you buy a Bitcoin ETF in a tax deferred account, like a traditional IRA account, tax deferred. This route avoids capital gains taxes, meaning that your Bitcoin will appreciate tax-free while it stays on your account. But as soon as you withdraw money from your traditional IRA account, whether it's if it's a Bitcoin, it has to be self-directed IRA account. If it's an ETF, you can buy it in stock market brokerage, traditional IRA account. As soon as you withdraw, you will pay ordinary income taxes on the proceeds. And that could mean paying more than half of your profits to Uncle Sam. Meanwhile, if you hold Bitcoin in a self-directed Roth IRA, you will owe zero taxes, no matter how high it could go. We're talking about proceeds, for example, if Bitcoin will go from 50 to 500, you will have 450,000, no tax owed, okay? I hope I demonstrated to you that self-directed Roth IRA is likely the best method for most investors. And by the way, keep in mind that all of these examples are using current tax rates, and honestly, all signs are pointing to higher tax rates in the future. Obviously, any increase in the tax rates would only create a stronger incentives for people to shelter their investment gains from higher taxation requirements. And again, I think I mentioned this before. In this mini training, I refer to US-based retirement accounts. Similar accounts exist in other countries. You can just Google what is the equivalent if you're not living in the United States, how you can take advantage of this retirement investing accounts, and especially if you have self-directed accounts. And tax-free accounts. Okay, so in the States they call Roth accounts, but in other countries they may have different names. All right, next I want to talk about examples of the custodians that you could use to have your self-directed IRA accounts. Let me share with you two today here in this training. So the first one called Kingdom Trust. Kingdom Trust is a custodian company that was founded in 2010, and it's a custodian that allows customers to hold just about any type of assets that is allowed in self-directed IRA accounts. So it platforms provides custody for more than 20,000 different assets, alternative assets, even assets like cattle and church building, like very, very odd assets. Now, this firm makes handling Bitcoin, because they also offer cryptocurrency holdings. They make holding Bitcoins and other cryptocurrencies really easy for you, okay? And I believe they already allow more than 20 cryptocurrencies. All right, next custodian that I want to share with you today, the company called Bitcoin IRA. Bitcoin IRA was founded in 2015, and the company offers custody of Bitcoin and Ether and other assets, many other cryptocurrencies, as well as assets like physical gold and silver. All right, I know that I shared with you a lot today, right? A lot. And I want to kind of give you some summary of what we discussed today. Most investors know something about IRAs, and millions are using them. So this is not something new. But the Wall Street has already ensured that the vast majority of people keep their IRAs at brokerage houses, where the only investments that people can make are stocks, mutual funds, ETFs, bonds, and other traditional financial vehicles. In contrast, self-directed IRAs open up a vast world of additional alternative possibilities, alternative investments, including real estate, commodities, private companies, shares, and cryptocurrencies. So when you combine that with tax advantages that Roth IRA accounts, tax-free accounts offer, you end up with the chance to pursue life-changing gains inside your retirement accounts, with the ability to keep most of the income and profits for yourself, and maybe even not most, but all. Even if your income is too high for contributions into Roth IRA or Roth or self-directed Roth IRA, there is a backdoor conversion strategy that makes it possible for people with higher income level. So smart, successful, rich investors, that's why they become rich, because they know how to use successful investing strategies and tax saving strategies. They have been using self-directed accounts for decades, and they save tons of money in taxes, okay? We're talking about billions with a B. And today, I invite you to seriously consider using these tax saving strategies as well. Okay, beautiful people, that's all I wanted to share with you today. We reviewed the different types of IRAs, traditional rollover, Roth IRA, and the backdoor strategy that many investors use to fund their Roth IRA, and also the most powerful way to use investing in retirement accounts, which is self-directed IRAs. If you want to discuss any specific financial situations, or how you can apply the knowledge that you now have about investing accounts and ways to save on taxes. If you have any particular questions for me, I invite you to schedule your complimentary consultation with me as soon as possible. It's a 30 minutes consultation, value $400, but it would be complimentary to you. And we will address your unique financial situations, your goals, and your questions. And here's the link to schedule this call. Listen, thank you so much for watching this mini training. Please don't forget to post the comments below this video. Let me know if you got some value. Let me know what insights you got, what ahas you got, what concerns or questions you have. I really, really, really want to hear from you. And I'll be back next week, same place, same time, with another value-filled mini training. Enjoy your day to your health, wealth, and freedom.